Auzex Resources is a gold exploration company listed in its native Australia, where its main unit is a 50% owned gold project called Bullabulling. The company's recently received an unsolicited takeover offer from GGG, which holds the remaining 50% in Bullabulling. John Lawton is the Managing Director of Auzex Resources. Welcome. I want to touch on the takeover offer from GGG in just a moment, but first the resource. How far down the road to production are you? Give us some perspective as to how big this resource is as well, some sort of perspective for investors.
I'll give a bit of background. We provided a resource upgrade in August of last year, which was just under 2 million ounces, 45 million tonnes at 1.5 grams. We're in the process of upgrading and increasing that resource, and that announcement is due next week to the market, subject to consulting sign-off. The plan has always been, by both GGG and ourselves, to reach a minimum reserve of 1 million ounces to go to full feasibility, bankable feasibility, which should be completed around about the end of this year. And on that basis, production would be commencing 2013.
What sort of money are you going to need to take it forward to production? I think on your own admission, you're burning cash about $1 million Aussie dollars a month. I think on your own admission that's quite a lot, but of course there's a lot of things going on to take your resource through to production. I know you're planning to raise about, what, 25 million Aussie dollars, I think, to aid the progress of mine development. How close will that take you to that final goal?
It won't get us into production. The whole financing of it will be completed once we've completed the bankable feasibility study around about the end of this year. And once we do that, then it'll be a mixture, I imagine, of debt and equity. Do
you envisage any difficulties in raising the money?
No, we don't. We've had a lot of interest already from bankers and financiers generally, a lot of interest in the project. It is quite a significant project in the Australian context, definitely. And I think it'll be highly bankable. But we won't know that until the end of this year, when we've completed the feasibility, and that's when we will be talking seriously to bankers.
You're planning to raise 25 million Aussie dollars to aid progress in the mine at Bullabulling. Is that just going to be raised in Australia?
No, it isn't. The intention is that we'll be raising globally, but obviously making it attractive for Australian and UK investors. We haven't finalised a plan on that, which way it goes.
But you're also going to be listing here in London. Is that ultimately so you can raise money here as well? Absolutely.
The main intention is to make it attractive for UK shareholders to participate in Bullabulling through Auzex. That's the main driver for it. Obviously, we'd like to see GGG shareholders seeing Auzex being more attractive as an investment than GGG, and that's the main driver for listing here. But it really is to be involved in both markets.
Part of the listing in London is all to do with your wanting to demerge some of your smaller assets. Outside the Bullabulling project, just quickly outline those smaller assets and what contribution do they make to the company at the moment?
They are small in comparison. We've got a significant gold project in Lyle in the South Island, New Zealand, a tin project in North Queensland, and a moly bismuth tungsten project in New South Wales.
Going back to this takeover offer by your 50% partner at Bullabulling, GGG Resources and your major shareholder Baker Steel Capital Managers is siding with you in your defence of this. It's urging with you to work towards a friendly merger of the consolidation with GGG. What do you see as the message here for shareholders? I mean, what should shareholders be looking for here ultimately for these two companies?
Well, firstly, the message from our shareholders is very clearly that they don't support the takeover. They don't see it attractive in any way, certainly Auzex shareholders. And really that's part of the reason we're here this week, is to spread the word amongst GGG shareholders and brokers, etc. here. It's a very clear message, and the board's position has always been unanimous in not supporting the takeover. And certainly the market research we do shows that that is an attractive option for our shareholders. I guess as far as getting what we're providing for, or Auzex's proposal to resolve the situation is for a merger as under a scheme of arrangement. In other words, a non-premium merger where both boards meet and agree the terms, the construction of the board and the vehicle to be used. It's really quite straightforward, and I think that's in the best interest of both groups of shareholders.
What's been the reaction of shareholders to this approach and your response, and indeed the word from Baker Steel Capital?
Well, Bakers are certainly very keen to. Investors don't like to see delays and uncertainty, if you like, for the project. This has been carrying on now since it was first announced in mid-March. It has to be concluded, and we're trying to make that conclusion brought forward as quickly as possible.
Steering through everything we've been talking about, shares what $60 odd cents a share, and you've got a market cap about 60 million Aussie dollars, I believe.
Yeah.
What do you say to shareholders? Where do you see the company going? Let's say this time next year, as an MD, what do you envisage for the company for Auzex?
Our target statement, which is a response to GGG's takeover, spells that out very clearly. We see Auzex being the vehicle for the project. It should have retained local management and under the Corporations Law of Australia, etc. Auzex is clearly the preferred vehicle for the Bullabulling project, and that's very much our position. So we would like to resolve the mess that we're currently in. It's not to the benefits of any of the shareholders, GGG or Auzex. We're clearly being valued at a discount to the market. The general view is that that's somewhere between 30 and 50%.
30 and 50% under what you expect the market value to be for the company?
Absolutely. And that's been told to us very clearly. Typically what people just want to see is that it's fixed up in the shortest time possible, and it's up to the boards of both companies to do the best in that direction.
Okay, John, it's been a pleasure talking to you. Thanks indeed for joining us. John Lawton there, he's Managing Director of Auzex Resources.
This film is for educational and leisure purposes only. Proactive Investors does not provide investment advice. The company is a publisher and is not registered with or authorised by the Financial Services Authority. Please refer to the full terms and conditions on the Proactive Investors website.